In today's video, we'll be discussing how to spot potential reversals in the foreign exchange or Forex market. In this video, I'll talk about some ways that you can potentially spot early signs that an existing trend in the market may be reversing and potentially starting a new trend. The idea here with spotting reversals is that you're looking for the concept of a trend that has now broken down and materially started to trend in the opposite direction, potentially giving you the chance to look and join that move before the majority of the new trend starts to take place. Reversals, when caught correctly, give you the chance to be early to a new trend. And essentially, spotting a reversal is the idea of catching a new trend early in the sequence. Now, first of all, when it comes to trading reversals, you need to be able to spot existing trends in the market. How can we do that effectively? Well, in a recent video on the channel, we actually discussed how to spot trends in more concrete detail. If that's something that you're interested in exploring, we'll leave it pinned in the top right hand of the screen right now, as well as linked in the description down below of this video. But to give you a high level recap of how to spot trends first, here's a couple ways that we can do it. A simple way to spot trends would be to employ a simple moving average. Check this out. If we go to indicators here on TradingView, we can apply a moving average simple here. And then what we can do here is we can adjust it by double clicking or clicking the gear in the top left. Once I've opened up this gear, you can see I have an inputs, style, and visibility tab. Let's start with inputs. And let's change this moving average from a 9 length or 9 period moving average. And let's actually change it to a 50 period moving average. Now what we can do here is we can click OK, and you can see that's changed our moving average to be a bit more smooth and looking back 50 candles to create this blue line. Now let's actually make this just a little bit easier to see by changing the color to yellow, and I'm going to increase the size just a bit here as well so we can see this clearly. Now with a simple moving average, we're essentially making it so that we can see a smoothened out variation of price. And when we look at the euro versus the US dollar here, what we can see is that we are trending down here. We're starting to trend up, and all we're doing is basically looking at whether or not the price action is trading below the moving average or above the moving average to consider a downtrend and uptrend respectively. Now, the first step to spotting potential reversals in the foreign exchange market is to understand existing trends that are taking place. And spotting trends, like I said in that full video linked below, there's a couple different ways that you can do this, but for simple purposes, let's just use this 50 period moving average. We'll simply define that when the price action is trading above the 50-day moving average, in this case because we're looking at the daily chart, but the same things can be applied to all time frames. When looking at the 50-day moving average, you can see that we are trading above, and hence we would call this a upward trend. Now, to spot a potential reversal using a simple moving average, which is going to be the first methodology here, we're simply going to look for a closure back in the opposite direction from the existing trend that we're in. So if we were to draw this as an example, we'd be looking for a scenario in which price comes down and actually closes below the 50 period moving average in yellow. Upon closing below the 50 period moving average, we would call that a potential sign that the existing trend may be ending, and potentially we could see a new trend starting to form. At the end of the day, reversals are essentially the idea of spotting a new trend. Sometimes the word infers that this is the idea of trying to call the top or bottom of the market, but in terms of a reversal, we're kind of waiting for price to show signs that a reversal may be underway. For example, we can go take a look at this example over here and say, look, we have this upward trend overall, and then we got the decisive close. I would say you could say this candle, or you could also say this candle here. Both of these were closures below this 50 period simple moving average, which led to multiple months of downward trending here, and we would call this again a reversal. Now, another way to spot reversals, and this is in my personal view a way that I really like to do this, I like to look for market structure to fail to hold a upward trend or a downward trend. Let me give you a simple example with current price action in the euro US dollar. If, for example, we were to see a scenario in which the euro dollar fell and we came down to this key level of support that I've marked on the chart. Now, when it comes to drawing support and resistance levels, what I typically look for is V-shaped movements that occur in the market. So for example, this could be a possible level of resistance. This would be a very obvious level of support. This would be a very obvious level of support. And so I draw my levels based around these V-shaped moves up and down. And so I've drawn my my support level at this area. Let's just assume that price were to hypothetically return to this area. By default, we would call this an upward trend because we're seeing higher lows, higher highs. And we also saw with our moving average filter that we would call this an upward trend based on those criteria. Now, again, when it comes to defining reversals or defining trends, there are many different ways that traders choose to do that. I'm showing you my two favorite ways to identify trends using simple moving averages and using market structure. So we have this key level of support that, again, we've defined by this key area of support where buyers stepped in and reversed price very quickly to the upside. So if we're talking about spotting reversals in this video, what we'd want to see would be price to come down to that same area, but this time instead of seeing a sharp movement higher, we would want to see, in terms of spotting the potential reversal of euro dollar, a failure to hold that area of support, nullifying the idea that support is causing buyers to step in and buy and push this price back up. We'd want to see the opposite to be true. Essentially, buyers failing to hold support levels and actually starting to show signs of a newer trend, which would be key areas on our chart or market structure failing to hold for the buyers for a bearish reversal pattern. Here's a few other really common patterns that traders often look for in terms of spotting potential reversals. Let's say that we're sitting in a consolidation zone, like we saw here on the euro dollar, where essentially buyers and sellers were sort of equal between this range, basically causing the price to go back and forth. When you spot these really tight levels of consolidation where we can clearly see, price comes up to this area, sells off, price comes up, sells off, sells off, sells off. What's interesting about these zones is you can sort of map them out and say, for example, okay, we have this level of clear resistance and we have this level of clear support. But what's interesting here is we have this back and forth price action until all of a sudden we get the strong closure outside of this consolidation zone. So another way to spot potential reversals is to identify consolidation zones and look for clear closure outside of it to determine the possible new direction of the price action from here. So you can see we had a big closure outside of this consolidation zone, which led to a period of continued upside for the euro versus the US dollar. We can see here another clear example where we put in a high for the euro dollar, and then again that same high level got retested. Many traders would call this a potential double top pattern. Now, when spotting double bottoms or double tops, which is a very simple definition, essentially we have a level of resistance that held twice in a row here, kind of topping out. You can see why the double top name makes a lot of sense. It's pretty intuitive. However, if we take a look at our level of support here, this is where I think actually a lot of traders sometimes miss this reversal pattern and how to properly use it. So we have a big level of resistance that comes in here, and then we come back to that level and fail out once more. But really the key sign that this thing is truly reversing, in my view, would actually be to wait for the break and closure below this level of support. Now you might say, well, this is not really catching the top per se. But in my opinion, the way to approach this is not necessarily to try and call the top of the market, but rather to look for that opportunity for signs that breakouts are occurring or that we're getting true reversals in the form of a new trend starting, rather than trying to call the exact top or bottom of a trend. Now, of course, there are many different ways to spot reversals or trends in financial markets, but I've shared a couple of the ways that I like to analyze the markets. But I'd love to hear from you guys. What other patterns do you consider using? Or are there some videos that you think we should make in the future on this channel? Thanks for exploring reversal patterns with me, and we'll see you in the next one.